So what I want to, are you still bearish or not? We're going to have to see. Is it, you know, it's hard to call turning points, but welcome. We've had a pretty good session the last couple of days.
Yeah. Look, Kelly, bell curve trading, we're the only ones that had this. I was on your show December 31st, last day of the year, and I said, look, equity markets are tapped out. People mocked me, ridiculed me, said, look, 2025, we've got a tight labor market, strong economy, Fed's easing, more pro-business administration in the White House, and we're going to have a strong year. And I said, no way, it's done, it's over. Because I knew the long-term trend off the March 2020 lows was basically done. And then fast forward to March 10th, I came on your show. I said, look, I'm the most bearish guest on the network. I said, we'll be lucky if we're only down 20% top to bottom across the major averages. And more than likely, we're going to be down 25%. You fast forward, you look at the NASDAQ 100 top to bottom, down 25%, S&P 500 down 21 to 22%. And the Dow down 18 to 19%. So the key question is, where do we go from here? And in terms of broad brush terms, I still think it's not over. I think, you know, probably across the board, it's another 15% to go to the downside. Look, the top wasn't that difficult to call. It really wasn't. And I think the bottom, typically on these major trends, when they roll over, they do the same thing. They mean revert to fair value, which is a fancy way of saying that the market should drop down to where most of the trade activity has taken place on the major trend, which is the rally off the March 2020 lows. So in the S&P 500, what that equates with is 4,500 to 4,100. In the NASDAQ 100, it's 16,000 to 14,500. And in the Dow, it's 35,000 to 33,000. So, you know, get your paper and pen. Again, S&P 500, 4,500 to 4,100. NASDAQ 100, 16,000 to 14,500. And Dow Jones, 35,000 to 33,000. That's ultimately where I think we bottom. You know, people come on these shows every day and tell you, you know, every 50, 100 point drop in the S&P to buy the dip, buy the dip. And what I want the people watching the show is, number one, to be patient. Number two, the location is critical. All those levels, pay attention to those levels, because trading is a lot like real estate. Location, location, location. You can buy a great stock, a great company at a bad price, and it's still a bad trade. So keep your powder dry to the levels I mentioned, and just wait. I think you're going to have a better opportunity.
How much of this market, Bill? I understand tariffs and trade and Trump and all the headlines are sort of driving. They're kind of the match that lit it. But I do not believe, and you tell me if I'm wrong, that this was a market that was that healthy underlying to begin with. I tweeted as much back in August saying, you know, it's not for me to say buy or sell. It's not my job. But I can notice things like valuations. How much of this market was kind of ready, if any, ready for a fall? And this was kind of the match that lit it.
It's a really good question, Brian. I totally agree with that. Look, I was on CNBC Power Lunch months in advance saying, look at the S&P to top out at 6,000. NASDAQ 100, 22,000 to 22,500. Dow Jones, 45, 46,000. That's exactly what happened. And that was months before the tariffs, the Liberation Day fiasco. Why? Because the major trend, the rally off the March 2020 lows, was tapped out. You know, look, I've done hundreds of these interviews over the course of my career. Everybody says they're a long-term investor. You want to stop an interview in its tracks? Ask them, what's the long term? Is it 3 years, 5 years, 10 years? Is it going back to 1929? 99 out of 100 people have no idea what the long term is. The key driver here was the rally off the March 2020 lows in the height of the pandemic, when we knew we were going to get historic monetary and fiscal stimulus. If you knew that that was the right trend, you could have known months in advance when the market was going to top out. I gave the targets months in advance. If you missed this fundamentally or technically, you were asleep at the switch. And you're right when you say, Brian, the accelerant or the lighter fluid was really the tariffs and the Liberation Day. But the market was primed for some sort of a pullback to begin with.